Hello subscriber, welcome to my YouTube channel Knowledge Videos. Today we are discussing the Corporate Accounting and Financial Management Lesson 1 topic Subsidiary Book and Cash Book. In this video you will come across the idea about what is Subsidiary Book, what is Cash Book, and what will be the format for the different types of Cash Book, what will be the different format for the different types of other subsidiary book except Cash Book. Let's go ahead to understand the concept of cash book. A cash book is a special journal used for recording all cash receipt and cash payment. In simple form, what we can say, the cash book is a book which is used for the recording the information of your business cash transactions, whether it is a cash receipt or cash payment. It serves as a book of original entry where transactions are recorded for the first time from source document. The cash book is a larger in scope because it is a designated in the form of a cash account, recording cash receipt on the debit side and the cash payment on the credit side. Therefore, the cash book functions as both a journal and a ledger. So in simplified way, why there is a need of subsidiary book? When there is a frequent number of transactions are there in a business transaction, so in that case we need to prepare a separate book, or that book we call as a subsidiary book. So cash book is a subsidiary book where we have to record all the cash related transactions, whether it is a cash receipt, whether it is a cash payment, or even whenever we received the check from a creditor or from a debtor. Once we receive the payment, that time also we record this entry in the cash book. Let's go ahead and regarding the more into details of the cash book. There are different types of cash book. The first type of cash book, that is your single column cash book. What are the features of single column cash book? Has one amount column on each side. It is a form of account, and where we have a debit side and credit side. The right hand side is your credit side, the left hand side, that is your debit side. So if you find any cash book which contains one column, that is a single column cash book, all cash received are recorded on the debit side, all cash payment are recorded on the credit side. The function as a cash account, eliminating the need for a separate cash account in the ledger. So there will be no need of preparing a cash account in the ledger, because the subsidiary books itself give you the opening and closing balance of the requirement for the purpose of trial balance. It shows the actual balance as on date whenever it is required. So it is a type of cash book that we call as a single column cash book. Let's go ahead to other type of cash book, that is a double column cash book. It has two amount columns on each side, which can one of the following combination: cash and discount column, cash and bank column, bank and discount column. So it is up to the accountant, or it is up to the business activity, what type of account they can consist, or what type of amount they can consist in this double column cash book. Either they can go with the cash and discount column. So in the debit side, if you see discount allowed, in the credit side discount received, cash and bank column, and in the bank and discount column. So this is the things that we talk about the double column cash book. Triple column cash book, when there is a three column is there in the cash book in the both debit side and credit side. Has three amount column on each side, one for cash, one for bank, and one for discount. So it record all cash received, deposit into the bank, and discount allowed on the debit side. It record all cash payment, withdrawals from the bank, and discount received on the credit side. It serves the purpose of both cash account and bank account. Means it is a type of cash book where you will get an idea about your bank balance, where you will also get an idea about your cash balance. So that's why it is a type of account that we called as a triple column cash book, because it record three columns in the both the side debit as well as credit. Then multi-column and petty cash book. Let's talk about multi-column cash book. It contains multiple columns on the both the side of the cash book. You may have a column like cash column, bank column, discount column, then any other information you need to put up with the cash book that we call as a multi-column cash book in the both the side. So you whatever the column that you have created in the debit are the same number of columns you need to create in the credit side as well. Then petty cash book. Petty cash book, it's nothing but it is a cash book which is prepared for the recording small petty transactions. So it will be in the what we can say the transaction which is in the small value like 10, 20, 30, 40, 50. A petty very small amount will be recorded in this type of cash book that we call as a petty cash book. Now the question come into the picture. Is the cash book a journal or ledger? If anyone asks the answer, how are you going to answer it? Cash book is a journal as well as a ledger. Cash book as a book of original entry. Transactions are recorded for the first time from source document. That's why we call it as a book of original entry. Because whenever there is any transaction taking place, for example, you have made a cash transaction or you have paid some cash amount to Mr. X. So in that time, you have to record the amount in the cash book that you have made the payment. Cash book as a ledger. Yes, obviously, it is designed in the form of a cash account, recording cash receipt on the debit side and cash payment on the credit side. So from this angle point of view, we called it as a cash book as a ledger. So considering the above 2 points, cash book as a book of original entry, cash book as a ledger, now we consider or we conclude that cash book serve as a both a journal and a ledger. Now the next point is your contra transactions. What is contra transactions? Whenever we see that there is a transaction that involves discount given or received in cash after the settlement of dues are known as contra transaction. That means when there is a cash to cash transaction, bank to bank transaction, that case we are bank to cash transaction or cash to bank transaction that we call as a contra transactions. When there is a check transaction in the cash book. When a check is received and no further information is provided, means suppose in a business you have received a check and in that check there is no further information is mentioned. So what we will do? It is assumed that the check has been deposited into the bank on the same day it was received. For that purpose, what will be the journal entry? Bank account debited to debtors or parties account from the person from whom you have received the check. But when it is found that the check was deposited into the bank at a later date, means आप you will observe that और आपको पता चल रहा है कि आप एक चेक रिसीव किए हो मिस्टर एक्स से और वो चेक आप आज रिसीव किए हो और आफ्टर 2 days you supposed to deposit the same check in the bank. तो उस केस में when the check is received, so in that case what will do? Cash account debited to debtors or parties account. So this is the entry should be passed when this will be the scenario. Now come to the point when the check is received, that time cash account debited to debtor or party account. But when the check is deposited into the bank at a later date, bank account debited to cash account. Because in when you received, you have make a cash account debited. Now you have deposited, so you have to make the cash account credited. When the check is dishonored means the check is presented by the business, but due to the insufficient balance, the check is dishonored, or due to the any other reason, the check is dishonored. If there is a signatory issues, if there is a balance issue, fund issue, so in that case, what will be the entry? Debtor or party account debited to bank account. Now, other type of subsidiary books that will start with in the books of purchase day book or we call it is the other subsidiary book, purchase day book. What is the nature of this purchase day book? It's record transaction related to the credit purchase of goods only. Only credit transactions are recorded in the purchase book. Only credit transaction with respect to purchase. Cash purchases and purchases of item other than goods are not recorded in the purchase day book. Means if any purchase which is made out of the cash transaction, so that would not be recorded in your purchase day book. Periodically, the total from the purchase day book are posted to the purchase account in the ledger. You can see the specimen of the purchase day book here. The first column denote date. Second column denote the name of the supplier and details of the goods purchase. Invoice references, ledger folio, amount and remarks. The next type of other type of subsidiary books, that is sales day book. Like all the credit purchases we recorded in a purchase day book, like all the credit sales we recorded in a sales day book. The sales day book records credit transaction for the sale of goods to customer. Sale of other items even on credit are not recorded in the sales day book, but are entered in the journal proper. Cash sales of goods are recorded in the cash book. The total from the sales day book is periodically posted in the sales account in the ledger. So you can refer, this is the sales day book format or specimen. The first column denote date, second particulars, invoice reference, ledger folio, amount and remarks. Now return inward book. So as we know, when we do sales, there may be the chances of there is some sales return on that due to some quality issue, due to some other reason, or due to some sales which is made on the approval basis. This books records transactions involving goods returned by customer for a reason such as non-compliance with the samples or inadequate or quality issue. If this type of scenario occurs in the business, so in that case, the goods return back to the business. So in that case, we need to have a proper record for that. So for that purpose, we require a book. That book we call as a return inward book, or that we call also as sales return book. Typically, when a customer return goods to a supplier, they issue a debit note for the return goods value. Conversely, the supplier issue a credit note upon receiving the goods. So this is the sample or specimen for the return inward day book. You can refer it. Date, particulars, outward invoice, ledger folio, details, total and remarks. Next, we will talk about the return outward day book. This book record transactions involving goods returned by us to our creditor, such as items damaged in transit or not matching the sample. It is also refers to as a purchase return book. So in the sample or specimen, if you see the return outward book, the first column denotes date, second column particulars, third column debit note, fourth column ledger folio. And like debit note in the previous return inward book, we see that when the customer return the goods, they issue a debit note, and when once we receive the goods, that time we issue a credit note. So like the same, when we are sending back the goods to the seller because of the below issues, because of the below quality issue, so in that case this will be recorded as the debit note number will be there. Ledger folio, then details, total and remarks. Bills receivable day book. So this book record all bills received, posting them directly to the credit of the respective customers. The total amount of bills received during the period, weekly or monthly, is then posted as a single sum to the debit of the bills receivable account. So the sample or the specimen for the bills receivable day book start with the column number 1, number of bills, date of receipt of bill, from whom you have received, name of the receiver, name of the drawer, name of the acceptor, date of bill, due date, ledger folio, amount of bill, how dispose of. So all this necessary information is required for preparing a bills receivable book, because bills receivable means it is a amount when you supposed to, you know, that there is a due date for the certain bill is let 10th of July. So now you receive this amount before the 10th of July. So you have to specify the due date was 10th of July, but when you have received the day when you have received, let's today is your 7th of July. Bills payable day book. Like the bills receivable book, so like the same bills payable book. This book record all the details regarding the accepted bills, posting them directly to the debit of the respective creditor account. The total amount of bill accepted during the period, weekly or monthly, then posted as a single sum to the credit of the bills payable account. Now it's a journal proper. Journal proper is nothing but when the transaction involving credit that do not fit into any other subsidiary book are recorded as a in the journal proper. So if any transaction which is not recorded in any of the subsidiary book, then that would be recorded in a journal proper. This include transactions such as purchase or sales of asset, expenses accruals, rectification entries, adjusting entries, opening entries, and closing. These are the things to be recorded in a journal proper. That's why the format of journal proper mirrors that of general journal. The way it looks like for the journal entry, so same format to be followed for the journal proper as well. Thank you guys. Keep watching this video and subscribe to my channel. Thank you.